Congratulations in making that big step by considering to purchase your new home. Whether you are looking to have a home, a closer place to work, an investment, you're making a wise decision that will provide numerous long-term benefits for you and your loved ones. As you make your decision, you may have a few questions in mind, such as, what is the difference between saving and investing? What are the different investment options, benefits, and risks? What advantages will I get from purchasing properties from SMDC? By the end of our discussion, you'll be able to make a confident decision as you consider to invest in residential real estate. Let's get started. Let's begin by understanding saving and investing. Imagine you're a farmer who was given seeds. What do you do with it? Choosing to set aside the seeds to be cooked and eaten later is like saving. You'll have enough seeds for a while, but you'll have to look for more once you run out. It's a repetitive cycle. Unlike choosing to plant the seeds, you will continuously reap its fruits and new seeds. Investing is committing money today in order to earn a greater financial return in the future. If you are to start investing, what life aspirations would you like to achieve? Choose as many from the boxes below, then click Next. Investments can make your aspirations into a reality. As an investor, you decide how you invest your money to reap its benefits. You can invest in bank deposits, bonds, stocks, mutual funds, or real estate. When placing in bank deposits, interest is very low at just 1% per year. Even if 1% may seem better than nothing, the cost of living increases over time. 20 years ago, you could buy a full lunch meal for 50 pesos. Now, 50 pesos can only buy you a fast food snack. In the Philippines, the cost of living increases at an average of 3% per year. This is higher than the 1% interest rate of your bank deposit. This means you'll be losing the purchasing power of your money over time. If you have 1 million in the bank deposit today, it may only be worth 900,000 after 5 years. When investing in bonds, interest rates are a little higher than bank savings, typically 3 to 6% per year. This will cover the 3% average inflation, but it introduces the risk of non-payment of your invested money if the company fails. When investing in stocks, the returns have historically been better than bonds and bank deposits. However, stocks are volatile and entail higher risk of losses. For example, stocks went down by more than 50% during the financial crisis in 2008. This is why investing in stocks require a professional advisor with expertise. Investing in mutual funds addresses the need for time and financial expertise, as an investment firm does the selection and monitoring of stocks and bonds in a portfolio. As these funds are based on the combined stock or bond value selected, it can quickly and significantly go up or down depending on business outlook. Finally, you can invest your money in real estate. What makes it the best choice among other options? While it requires a longer investment horizon, it has many advantages. It is a hard and permanent asset. It is a legacy purchase. It can generate cash flow. And it is a scalable investment. You can always lease your property, as it has benefits such as earning passive income, gaining constant rental earnings with the rising need for homes, having a less risky investment, requiring less financial expertise. The beauty with real estate purchase is that there are ways to fund your investment. Established retail property developers usually offer flexible payment terms. You can use it as a mortgage collateral to get a housing loan from financial institutions. But if you have funds now, you can enjoy good discounts for fully paying in cash. Now is the best time for you to invest in real estate in the Philippines because international investment rating have kept rosy outlooks for the Philippine economy. Property values are on the rise. Housing loan interests are low. The greater demand to rent with the growing BPOs and millennial market. What does this mean for your real estate investment? Increase in value over time. Affordable and steady interest. Constant rental earnings. Can be sold at a good price due to increased purchasing power and good economic outlook. Let us give you some tips on the best areas to invest in real estate now. These are central business districts, beside the mall, in school hubs, and key cities outside Metro Manila. Properties in these key locations have high rental demand as they provide for more convenient lifestyles which allow shorter daily commutes, easier access to points of interest, more time for rest and relaxation, and more quality time with family. Now that we've covered basics, let's revisit real estate as a scalable business. We know that an investment is like planting a seed which will bear fruit during harvest time. Imagine having more than one tree giving you a larger harvest every season. With real estate, more units means greater potential returns. With SMDC, you can invest through our stretched payment terms. Let's say you bought a property at $3 million. Your 20% down payment can be spread over a number of months or years, costing you just a little less than $13,000 per month. For the 80% balance, banks these days offer very low interest rates and long-term payment schemes, making your investment more affordable. If you're able to get 5% per year loan rate and a 20-year term, then you just need to shell out a little less than $16,000 per month to pay off the remaining balance. Through leasing, you can easily pay for the monthly amortization with rent income. Let's say you're leasing out your unit at $18,000 per month. This is more than enough to pay your monthly amortization. Plus, you'll have some money to spare in this case. However, your earnings as a real estate investor don't stop with rental income. Remember that property value appreciates over time. If your property appreciates by 5% per year, then you'll get property appreciation gain of $150,000 per year. Add this to your net cash flow from rental income and you'll have a return of $180,000 for the first year after unit turnover. Sounds good? If you can invest in 2 or more properties, your gains can increase depending on the number of units you purchase to rent. What makes real estate such a good investment compared to other investment models? Let's say you deposit $12,000 monthly or $144,000 yearly in bank deposits. After 4 years, you'll have a total gain of $14,000 with the 1% increase from your base cash deposit. In comparison, pre-selling real estate presents a greater investment value. The key difference is that your reservation fee and monthly payments allow you to lock in the whole property value, which is the base of increase. If we base from the recent property value increase rate of 5% per year, you'll have a total investment gain of as much as $600,000 after 4 years from just one real estate unit. Over the past decade, SMDC has grown to be one of the largest and fastest growing real estate developers in the Philippines, with 35 projects launched, 90,000 units sold, and more than 54,000 happy homeowners all over the Philippines. You are making a good decision as the SMDC 5 key success factors are always present. Prime key locations, integration to commercial areas, hotel-like lobbies, resort-styled amenities, and professional property management. SMDC has made the 5-star lifestyle available through our attainable and convenient prime properties. This is why SMDC is the good guys. We want to share this vision with you as we provide the SMDC investment advantage with our convenient prime real estate offerings. SMDC already has numerous projects in key growth areas for prospective homeowners like you. In central business districts, where professionals don't have to deal with heavy traffic. Beside the mall, where families can enjoy their time off without much hassle. In school hubs, where students can get to and from their homes safely. And finally, key areas inside and outside of Metro Manila, where tourism and businesses are continuing to expand. Start your real estate investment with